the way I got to Bitcoin, I made an introduction to a friend of mine, and he ended up winning the project to build a Chivo wallet for El Salvador, the second one. They're called Dekai. This guy Laszlo and his co-founder Mark built it. And the point is, when they launched it, it was getting like 250,000 daily active users in this tiny country, and it got like 4 million cumulative users pretty quickly. And that's when I realized, of all of like crypto, Web3, and everything, Bitcoin is the thing that has crossed the chasm. It's simple. My parents get it. They can understand it.
Key piece of ordinal infrastructure we're going to talk about today. I am here with two of the co-founders of DLC.Link, Aki and Jesse. DLC.Link is discrete log contracts. I almost said functions right there. To me, it's almost like magic. I've seen a few ordinal teams begin to use this, from borrowing and lending to some sort of like vaulting mechanism, even on the Ethereum side. I'm going to have them explain to me because I'm not a dev, but to me, it sounds like it's kind of a degree of smart contracts for Bitcoin on L1. You're not going to L2s, although you can use it on L2s. And so I think it's very important to kind of go through this technology because it seems like it can be applied to most of these protocols. And if we want to grow the overall ordinal pie, we should all be working together and not trying to be these tribalistic apes that most of us have become. So I'm very excited for this conversation. Thank you guys for joining me. We'll start with Aki, so that we're kind of just having a flow going. If you just quick introduction of who you are and how you got or how you ended up co-founding DLC.Link.
Yeah, definitely. It's great to be here. So I've been a developer all my life. I started coding like 9 or 10, but I started with Perl at 13. It was like this big, thick book of Perl, and I found regular expressions, and my brain just went, "What?" And you know, even today, I think a lot of the AI and stuff, it's basically pattern matching. I'm like, oh, this is what computers can do. And so I did a computer science degree, a business degree. I spent 2 years in management consulting, did a quick stint in private equity, venture capital, late stage, and then I've been an entrepreneur ever since. 10 years in entrepreneurship. I founded a AI marketing optimization company in 2013, 10 years ago, started working on that. I worked with some scientists and invented a way to optimize web content for search, for SEO, and publishing, built a company around it, 50 people, 5 million ARR, company's called Market News. I raised VC money, equity, debt, kind of did the whole thing for 8 years. And then 3 years ago, I was like, all right, like that product is figured out. Let's figure out another problem, and ideally something that helps society. And so I had heard of Bitcoin in 2011, but regrettably I didn't lean in at the time. I heard of ETH in like 2015, also didn't lean in. You know, that's okay. Next best time is now. So I came to the space. The way I got to Bitcoin, I'll try to keep this short, but I made an introduction to a friend of mine, and he ended up winning the project to build a Chivo wallet for El Salvador, the second one. They're called Dekai. This guy Laszlo and his co-founder Mark built it. And the point is, when they launched it, it was getting like 250,000 daily active users in this tiny country, and it got like 4 million cumulative users pretty quickly. And that's when I realized, of all of like crypto, Web3, and everything, Bitcoin is the thing that has crossed the chasm. It's simple, like my parents get it. They can understand it, especially just as a store of value. And it's just and the simplicity too, because when you get into ETH, I love all the chains. I don't hide my love, but when you get into like ETH and L1, L2s, whatever, like it just gets really complicated. And the simplicity of Bitcoin really appealed to me. So I'm like, okay, what could we build on Bitcoin that would enable a lot of functionality? And I found this white paper. I talked to actually a friend of mine who's now at Swan, who kind of pointed me to this DLC white paper. And I realized that this thing had been invented by Taj, who created the Lightning Network. And he published a white paper about DLCs in 2018 when he was at MIT. But nobody, had built a platform. One company, SuredBits, this guy, Chris Stewart and Nadav Cohen at SuredBits had built some beginning kind of infrastructure to proof of concept and a specification. But I realized, wait a moment, like, as you said, this is like conditional logic on Bitcoin. I wouldn't say it's smart contracts to the extent that people think of smart contracts, but it's like an if-then statement. If then, if, and which is great for lending auction. Like there's so many places to use an if-then statement on Bitcoin, and it's much more safer than a bridge. We'll talk about that. Safer than, custodial or wrapping. So anyway, wrap it up. I started just building DLC.Link with Jesse in order to bring this to market, plug it in everywhere, make it really easy to use, create great user experiences, and just grow a bunch of TVL and a bunch of adoption on Bitcoin.
Yeah, with a non-Turing complete blockchain of Bitcoin, simplicity is better, right? If you do want grandma to kind of understand it, until you start explaining mining to them, and they're just like, "All right, I'm lost. I don't care." But yeah, the if-then is something that this like emerging ecosystem of DeFi and Bitcoin, I believe, is like one of the best use cases, which we'll talk about. But Jesse, how about yourself? How did you end up in this crazy world of DLC.Link?
Yeah, you're a historian. It's always interesting to look at the stories, the timelines, and you could never, hindsight becomes 2020, but you could never predicted it ahead of time. But yeah, I was actually from the Bay Area. So an interesting thing that Aki didn't mention about us as co-founders is that I'm from the Bay Area, and now I live in Budapest, and Aki's from Budapest. He doesn't actually live in the Bay Area, but he lives in New York, the next techiest city in the US. So, yeah, but so he and I met here in Budapest. I had been doing tech in Silicon Valley for quite a while. I did some IT consulting, moved around, but then was in the Bay Area for quite a while, worked at Pivotal Labs, a company called MoPub, and then Twitter. And then decided I wanted to kind of make a life change and stop. I've been working straight through since 18, needed to take a little break and try something different. So I just thought I'd move to Europe for a summer or so. And here we are 7 years later, give or take. And I met Aki. So it's actually a really cool place to be entrepreneurial, I think, in Europe. Not because the VC checks are bigger. That's definitely not the reason, but because the lifestyle can allow for a smoother, kind of better safety net and a smoother transition to be an entrepreneur. It's just, to set out on your own in San Francisco, you better raise $1 million in your first month, otherwise you're homeless. So, yeah, so Aki and I met at a startup meetup here, connected by a mutual friend of ours. And yeah, the rest is history. As Aki mentioned, we were both curious about doing some entrepreneurship. He continuing, I had done a little bit in my recent past, but now I'm the CTO of DLC.Link, which is a very comfortable role for me. Yeah, and crypto is just so fascinating. I mean, market, the highs and lows of the market aside, it's still a just fascinating place to be building. And the future potential of blockchains and where Bitcoin fits into that is fascinating. And how it'll affect governments and voting and identity and finance, and the implications are huge. And I'm not surprised it's going to take decades to really transition onto it. And who knows what it'll look like when we do, but it's definitely going to be part of the future. And yeah, we saw Bitcoin as just, to me, it's great. I would something unique that we do, which I guess we can detail later as well. But we're taking the simplicity of DLC, and this is to speak a bit to Aki's point about his love for all things blockchain, not just Bitcoin. But each blockchain has, it's a tool for the right job. And so we use Bitcoin as money, as the store of value, and something dead simple. And that's what it's for, and that's what it's great at. And you shouldn't have to explain to grandma a ZK roll up on an L2 in order to say it's okay to buy a coffee with this token. Like can be what Bitcoin is for. And something we do unique at DLC.Link is that we power the either Oracle, or we call it the attester layer, but this kind of mediator third party that helps dictate the outcome of this if-then statement, as Aki mentioned, the Bitcoin contract. We're actually powering that with other blockchains. So, we'll get into some details, but basically a DeFi app or some banking app or some finance app on any blockchain, user, dealer's choice, can help power the simple movement of Bitcoin, but let Bitcoin be the monetary layer and keep that dead simple. So, you're already, whenever you do an online transaction or anything, someone wrote code to move your money around. That code should be on a blockchain somewhere. It shouldn't be running on somebody's servers in AWS. It should be on a blockchain. Different blockchains have different optimizations and use cases. So we're using blockchain technology to power the complex business logic, and Bitcoin as the pure monetary layer. That's how I like to think about it.
Yeah, I kind of see that as well. I think both of us, or all three of us, believe in this multi-chain future where it's the blend of strengths across each blockchain is really where you can empower entrepreneurs and individuals to use the kind of best products. But Aki, I know we've had a call before and we've talked. It's interesting how DLCs were created in 2018. There was no use case. And then all of a sudden Ordinals popped up. And for some reason, this technology works much better with Ordinals than it does with just Bitcoin, the asset. Could you dive a little bit into why that is and why all of a sudden DLCs are starting to pop up now more 5 years after creation?
Yeah, you said two things there that are interesting to kind of dig into, at least on a simple level. One is, we believe in a multi-chain world, or we are Bitcoin first. Our philosophy is Bitcoin as the only proof of work chain. If you have proof of work chains, you shouldn't have two or three, you should have one big one, and that is Bitcoin. So that's, other than the brand and the whatever and the design of it, that makes it unique as an asset. But then, you have all these apps on different chains and yada, yada. Well, even that statement, the fact that we're just kind of talking about it somewhat casually, a year ago, it didn't feel like that. A year ago, it was and I get that. I mean, I had a feeling a year ago when I go to a conference, am I going to get slapped? and it never happened. And but it definitely, there's been a lot more open-mindedness as recently, because I think people are starting to realize Bitcoin is amazing, but if there's, if adoption goes away and miners aren't making money, it's not going to be good for the ecosystem. So that's really cool that we can just kind of say that as as just an assumption that we feel that our audience would agree with. The other thing is why Ordinals are super exciting and have had a lot of follow-on effects around bringing people in. And bringing outside capital, even, I've talked to a lot of VCs who are now looking at Bitcoin because of Ordinals, which is great. And I also think Ordinals, of course, have some, unique advantages to NFTs, et cetera. But, DLCs are they've actually been really valuable throughout for the last few years. It's just that people didn't know about them. Well, the question is, why? Why didn't people know about them? And I think it does have to do with some of that maxi kind of thinking, the Bitcoin only thinking, where DLCs are useful for Bitcoin only companies, and they're useful cross chain. But the people working on DLCs as kind of Bitcoin devs, they just were not aware of the cross chain uses. So when we came into the DLC community and we're like, oh yeah, we're talking to yada yada and Polkadot, and Axelar and Cosmos, and they're like, who's that? There just wasn't that kind of awareness. And maybe because we came in with the lack of knowledge, this is we didn't have the curse of knowledge, so to speak. We came in with fresh eyes, because we're yeah, of course you want to have Bitcoin in Solana, getting traded around and so on. And so that was new. And so kind of our approach was new, brought a fresh pair of eyes, I guess. And then Ordinals kind of stacked on top of it, because with Ordinals now, you could have Bitcoin assets, traded on other chains or whatever. But, but now with Ordinals, when you look at even feature parity, you're wait a moment, why can you do this on OpenSea and you can't do it here? And it just makes it a lot more stark. Before, Bitcoin on ETH was sort of optional and a really good idea. But ordinals working with, DLCs with ordinals is sort of table stakes. Like it's just like something you need. Like you can get a lot done with PSBTs, and I have not built a ordinal trading protocol, so my knowledge is admittedly somewhat limited. But just you very quickly reach a point where you definitely need like an if-then statement with your ordinal, especially for something like lending or complex auctions or complex swaps or any kind of dynamic thing, like where you can't pre-sign it with a PSBT at a given price point, but you want some dynamic logic or any kind of advanced use case. So to some extent, it's just like ordinals. It's a perfect use case because ordinals, it's not like a nice to have anymore. This is a need to have. And then we also see ordinals wanting to have feature parity with NFT platforms, but we also see other chains wanting to get in on the ordinals game and having kind of the same issue is like, how do I actually implement? And that's where we all come in.
Yeah, I pulled up your article from your website, leveraging DLCs for ordinal auctions, trading, and lending. Whichever one of you is the more technically one. There are a lot of devs who listen to the show. Could you just explain, like, technically how some of this works for either of these ordinal auctions, trading, or lending?
Yeah, I could. Yeah, let me talk a bit about, let's say, the auction case. I think that's pretty cool. Right. So when you're locking a DLC, so when creating a DLC on Bitcoin, the inputs, the UTXOs, go into a multi-sig, and the set of possible outcomes gets predefined and gets partially signed, waiting for the output, the signed output from the tester to decide where it goes, how those UTXOs flow out of the multi-sig. If you wanted to power like an auction, let's say a new collection of ordinals, like it's similar to an NFT collection, is getting minted, and you want to auction off either one or a set of them, you need some kind of bidding platform. And ideally, you want to have your user, like what we've been trying to position is that the bidding should happen obviously natively in Bitcoin, but it needs some kind of logic to decide who's the biggest bidder, where this ordinal is going to end up with the winning bid. DLCs are great for locking that Bitcoin collateral, but where's the logic for deciding? And until now, ordinals are really having to be powered just either by wallet code or just like kind of Web 2 code, like some sort of off-chain code, because Bitcoin doesn't support smart capabilities for things like auctions. So this is really why ordinals need something like DLCs. So this would work by, for example, running a smart contract on another layer, let's say ETH, or we also like to talk about Stacks as well. So I give a little shout out to Stacks blockchain because they're very closely connected to Bitcoin. You mentioned non-Turing complete languages. They purposefully implemented a functional non-Turing complete language, and they can monitor transactions on the Bitcoin blockchain. So it's an interesting choice for building Bitcoin tools. And so imagine a smart contract written on Stacks that would allow the DeFi application to open multiple DLCs, each one requesting a user to sign in some Bitcoin to make a bid on an NFT. So a bunch of users are bidding Bitcoin natively. When those DLCs are getting funded, so the multi-sig is getting funded with someone's bid, that's being registered with the contract. Stacks can do that just by reading the Bitcoin blockchain. And if there's a bigger bid later, the first DLC just gets closed and that bidder gets their Bitcoin back. That bidder did not even need to know Stacks was powering this whole system, by the way. They're just using Bitcoin. So as far as they know, this is a Bitcoin app. But thankfully, it's being run on a blockchain rather than somebody's AWS EC2 where they hacked together some code over the weekend. So many DLCs are getting opened. Only the winning bid is ever going to be held. The rest are getting closed. So all of those Bitcoin bids are staying on the Bitcoin L1 chain. Nothing is getting wrapped, nothing is custodial. And only when there's a winning bid and the auction is closed would another DLC be opened so that the ordinal can be transferred to the bidder and the money could be transferred to the user. So those can all be done with DLCs. Everything stays native to Bitcoin, powered by stacks behind the scene. And there's never, and it remains completely trustless the entire time.
This is quite interesting. So first, bidding in Bitcoin, I think is a huge game changer because you can't even bid in Ethereum. Well, I guess you could, but you have to create a pool, right? Kind of like what Blur does. Whereas OpenSea, you have to use WETH, you have to wrap it, right? Which takes away some of the decentralization, adds some more risk factors. But dabbling on Bitcoin, as we mentioned, there's like a maximalist take. The ethos of Bitcoin is kind of self-sovereignty, max decentralization, self-custodial. Is there any trade-offs or we'll say a decrease in the decentralized spectrum when you use DLCs? Because I think a common conversation that I see discussed a lot is how do we get those OG Bitcoin holders to put their Bitcoin to work? Because they're traditionally a large holder base that does not want to transact in anything because they fear the risk of losing their Bitcoin because, quote unquote, everything is a shit coin and everything's going to take your money away from you. So for those that are, OG holders and listening to this, like, what is that kind of pitch to them of why they would use a discrete log contract and still feel safe about it?
Yeah, I can speak to that from a business angle. It really comes down to two things. One, DLCs enable for the cross-chain use cases for people who want to take Bitcoin, earn. Obviously, you can't stake Bitcoin directly on Bitcoin chain. That's by design. So if you want to, you're holding it, you want to earn a return in some protocol, it just gives you cross-chain interoperability. And you can choose which protocol, let's say even a simple case of you want to take USDC against it and then invest that USDC somewhere, whether you convert it into fiat and put it in a real estate fund or stock market or whatever, or you put it in a Web3 protocol like Ondo or Clearloop or Goldfinch or whatever. There's a bunch of options. Or you could just get an ETH loan and stake it and get quote unquote organic yield on ETH if you want to do that. It's just about giving options. The problem that DLCs solve is the only way to take a loan on your Bitcoin Ordinal BRC20, the only way to do this stuff is to use custodians or bridges. And both of them have known vulnerabilities. Custodians, you can always do that, do it on an exchange or do it, wrap it, swap it for WBTC or just send it to Galaxy or whatever. You can get a loan that way. But, if then that sort of goes against the point of having Bitcoin. Obviously, it's not decentralized anymore at that point, and you're subject to that risk, that avenue, that counterparty risk specifically. Or you can use a bridge, but the problem with bridges is they get hacked a lot, and bridges have these validator networks, and you have to trust the validator network. So what the DLC just solves is just the deposit side of that equation, where you're depositing onto Bitcoin chain. It's validated by all the miners. So it's, validated by the full hash rate of the Bitcoin network. There are no custodians. We as DLC.Link never touch it. Nobody ever has, custody of it. It is just an agreement between you and your counterparty, aka the lender, in a multi-sig, and you pre-sign the potential conditional outcomes, aka the repayment outcome and the liquidation. So you pre-sign basically like loan terms and conditions. Like, you deposit a Bitcoin and you take a loan, let's say 15K in USDC, and you pre-agree that if your, collateralization drops to 140%, you'll get liquidated and your one Bitcoin will go to the lender to repay them or whatever that business logic is. But you can choose to do that. So you can also choose not to do that. So if you choose not to, if you want to just hold your ordinal or your Bitcoin and not do any finance on it, totally cool. That is your prerogative. Then you eat the opportunity cost, which may or may not be important for you, which is great. But if you want to do something on that and you want to hold for the long term and you want to get some return without selling your Bitcoin, which I think everyone would agree is the worst option, then you can, choose your favorite protocol like Aave or whatever. And, although Aave doesn't support this yet, but our hope is one day they could. And then just take a loan and then do stuff with it and make some return while you're holding, over decades, hopefully. So anyway, we're just solving the security or the theft risk of the deposit side of the equation.
And with the...
Actually, if I could just jump in and add one thing there, Jake.
Of course.
Yeah, great. Not to dwell on it too much, but I actually love the question. And if I answered just with it's great, the business cases that Aki presented. I mean, hopefully you want to make some interest on your value. That's awesome. I actually love the question because, the security model for DLCs is really, really strong. I mean, the Bitcoin, it never goes to a custodian or even an attester network of attestation nodes or something that's going to hold the Bitcoin. There's no chance that anything goes wrong and the Bitcoin ends up in a third party's wallet. That's just not how, because you're putting it into a multi-sig with a predefined set of outcomes. It can only flow to the two participants in the multi-sig. So there's so much defense in depth on this. And then if you want to do anything with your so it's basically as secure as entering into a multi-sig as far as where the Bitcoin might end up. And if you want to do anything interesting with your Bitcoin, today you're trusting it to a software wallet to do something cool, or some website that's building scripts and saying, hey, sign here. So we're running, our design is that if you're going to do cool stuff with Bitcoin, let that software be built from a blockchain. So, users are already doing interesting things with their Bitcoin and they're just trusting non-decentralized software currently. So we're at least trying to decentralize the interesting, power, the DeFi logic.
I pulled up your guys' light paper, and I'm under the section, how does the DLC work? I saw that your partner you have two partners on there. One was Xverse, one was Chainlink, right, which is an Ethereum-based oracle. But it says here, the DLC is created with two parties and a third-party oracle. I'm assuming that is Chainlink. So could you describe what that means? If you're a native Bitcoiner listening to this, you immediately think some skepticism, I'm assuming, because it's an ETH-based protocol. But I know Chainlink has been exploring Bitcoin and some of these other chains as well. So if you could just go in a little bit of detail of what that actually means and how the third-party oracle and DLC.Link works together on this.
Yeah, I can speak to that. And we are actively working on changing or kind of putting out content to kind of change the vocab around this. Taj, and I actually, Taj, who wrote the white paper, I just saw him a month ago and I'm like, hey, Taj, just so you know, we renamed Olivia the Oracle to an attester because it's not an oracle. Like in the way the white paper described it, yes, you need like an oracle somewhere to determine, let's say it's two people betting on a soccer match, who won the game, and you need an oracle to do that. However, this actor in the DLC itself is not the oracle. It is an attester. And what does an attester do? It publishes an attestation, and the attestation comes from an oracle. So let's say, to use my previous example, Chainlink has an oracle offering, or Redstone, or whomever, Pith, or whoever has an oracle offering around, soccer games, and they have a bunch of nodes reporting on soccer games and whatever who won. They, you choose. Let's say you choose a sports betting protocol. I can't think of any off the top of my head because I'm not really good at sports. But let's say there's a sports betting protocol. You choose to trust it with your bet. That protocol choose to trust Chainlink sports betting offering. Cool. You've made that decision. Chainlink says, so and so won the game. Man U won the game. That decision is made there. That data goes to the smart contract of the sports betting protocol that said, okay, well, since you bet on Man U, you win. They make that determination there. They send a signal to the attester in the DLC, or it's not even a party to the multi-sig. It's just sort of around the DLC, and we can explain that. It's kind of like an electron orbiting the, the DLC, the two, atoms in the DLC. But anyway, it's sort of around there, and it basically gets that instruction said, okay, well, this menu has one, so attest to this. The attester checks, you can check on chain, like look on chain. Yeah, that's right, verify, boom. And the attester uses its private key to publish a number called a discrete log, but it's just a number. And that number is an active station that then the parties grab and they build in, and it's kind of like a PSBT. At that point, it's a pre-signed Bitcoin transaction. You get this missing piece, and boom, off it goes. The gas fees were prepaid, so it executes automatically, and it just moves through. And that's how you enable basically ETH smart contract logic, giving execution instructions into a Bitcoin if-then statement.
And interesting. So here, as I pulled up, it says, why now? In the fall of 2021, Bitcoin's Taproot upgrade added support for point-time locked contracts, PTLCs, and Schnorr signatures, which enables more powerful and streamlined DLCs. I know Schnorr signatures are one of, I think, the most recent Bitcoin Core upgrade that was voted on. How does DLC.Link use Schnorr signatures, and what is a point-time locked contract? I guess explain both of them.
Yeah, I can take a stab, and I'll have to admit it's been a little bit of time since I used to be a little bit closer to the precise wording around Schnorr, but with PTLCs, it's really simple. Like a lot of protocols use HTLCs, hash time lock contracts, where you have one parameter, time. With PTLCs, you can have a number of parameters. So time can still be a parameter, but you can have other logic as well. So it just allows for more kind of expressive, time locks, I guess, that are, needed for the mechanism. Schnorr is, and I'll probably keep this short so I don't come across sounding like a buffoon, but Schnorr was this thing that originally, like, they wanted the signature scheme to be in Bitcoin, but there was a patent. So when 10 years went by, the patent expired and they grabbed it, and it just it enables, increased efficiencies, and I'll just stop there.
Yeah, I pulled up the simple DLC flow so that those who are watching on YouTube or Twitter can kind of get a better view of this. So diving into, some of the use cases, maybe like a time lock example, could you do something like a bond, like a Bitcoin bond of some sort, where you put these Bitcoin into a time locked DLC vault, we'll say, and you can set a parameter of saying in 60 days, this Bitcoin will be released, and then maybe the other person can deposit additional to earn interest. Is that some sort of use case?
Yeah, and think of it also not just in the sense of a time lock. Maybe I'll simplify it this way. So DLCs, the if statement, the conditional statement, you can have anything, just like in programming, you can have anything used to evaluate that, anything that evaluates a true or false, let's say. Although you can have if then else, you can have, in our code, can have up to 10,000 conditionals, so 10,000 else clauses, but for all practical purposes, it ends up being just, binary. Usually it's one or the other. But anyway, that allows you to build any kind of parameter. So time can still be a parameter, because let's say there's a timeout. So let's say you're using a protocol and the protocol goes bankrupt or something, they go away and they never send that, Oracle thing or whatever. Then after a while, if nothing happens, you can just have the DLC unwind, and just, Bitcoin goes back to the original depositor, and that's it. So time is still if parameter for the purposes of the timeout, but you can have any number of parameters. So you can use that to build any kind of lending, trading, or investing kind of, system, derivative bonds, derivative prediction markets, insurance contracts, betting, now I'm just rattling things off, OTC trading, even if you're like buying, Bitcoin, you're buying Bitcoin for dollars or buying dollars for Bitcoin, you're doing that trade. Usually like exchanges use an off-chain hybrid custody provider like Fireblocks or Clearloop, Copper Clearloop. So you can use it there too. You can use it to basically any system where you're managing collateral or posting collateral. You're really, really wide. I'm sure there's a bunch of things I forgot. And then lending ends up being a big one just because lending specifically requires this sort of deposit capability and this liquidation capability. So that ends up being a lot of it. But there's sky's the limit. And so this could be useful in DeFi, can be useful in CeFi. So it's, CeFi, you might, for example, CeFi, companies typically have lending arms generally, and those lenders can only service full custody clients. So like if I want to take a loan on, whatever Galaxy, I have to send all my Bitcoin to them. Well, what if I don't want to do that? What if I want to maintain, self-custody of the Bitcoin, but I still want Galaxy to give me a loan? Well, with the DLC, you could, because you deposit into DLC with Galaxy, pre-sign their terms and conditions there, and then basically just more safely take that loan.
I've been browsing through the white papers and showing example right here is how to borrow borrow with USDC, right, which is deployed on, I think, multiple smart contract platforms. Through this conversation, to maybe just get the point across, DLC.Link, would you consider this a protocol or a product? And what is the I guess long-term goal for both of you at DLC.Link? Maybe over the next 2 or 3 years within either the ordinal space or just cross-chain?
Yeah, so like, what does DLC.Link do? What do you guys do? Like, so the DLC, like the DLC invention, I would say it already exists. It's already on Bitcoin. These Schnorr and PTLC stuff were enabled in Taproot. Bitcoin already supports DLCs. However, implementing DLCs into protocols and wallets and running these attesters and the infrastructure around the attesters, even things like these pre-signatures that you take a loan and you've got these pre-signatures for a long amount of time, could be months or years. Those need to be stored somewhere safe, somewhere secure, somewhere where redundancy, so on. There's just a lot of infra and dev tooling that comes around, with implementing this. And a lot of kind of consulting as well, just, building software, building it into places in specific ways, designing user experiences. So that's where we come in and help. And we're service providers. So we do consulting, we build products, we build documentation, we build marketing content, just kind of talking about, we take this to different chains and different protocols and just kind of open their eyes to this as a viable alternative to wrapping or bridging. And we just try to support the development and the, we evangelize DLCs and try to make it happen, just because we believe that, this is something the world needs. And so we try to be a resource. Obviously, we charge for our services. We also run hackathons, so we don't always charge. We do hackathons and support the ecosystem. But when it comes time to building, using the infrastructure, we charge for that. That's where we make our money. And we're just we want as many companies to be using DLC and as many DLC companies for there to exist, because this is great open source tech that everyone should take advantage of.
Yeah, I agree. So essentially, you're the team that's in the town square yelling about DLCs, just trying to be heard, tell everyone what is the right empowerment of the use case, which seems like there's a good compatibility within the ecosystem. But it's just speculating or just talking about the ordinal space. What kind of interest has DLC.Link received over the last, we'll say 4 months, because your light paper, it said, was posted in February. So maybe over the last 4 to 5 months. Just what is that interest and what kind of products are teams, I guess, talking with DLC.Link about building?
Yeah, it's really taken off recently. I sort of tangentially participated in the ordinal stuff when it was first kicking off. I can't say I was super deep involved. We were trying to build a lot of just foundational stuff, and to some level, we still are building foundational stuff. But in the beginning, you want to mint this stuff, so it's like it's a rush to mint, and and still on BRC20s, and there's some new stuff. There's a rush to mint, but then after a while, and these things accrue value, you want to trade them, you want to borrow against them if they have value. Some of them have significant value. I just learned that some Bitcoin rocks, I think, are like 300K USD in value. So you want to you have an asset, like you won the game, and so now you want to do stuff with it, which is great. So we're getting a lot of requests for complex auction types, complex swaps, derivatives, ordinals lending, you name it. There's a lot of there's a lot of anywhere where you want anything more than just beginner kind of capability, you're probably going to need DLC. So anyway, we've been fielding a lot of calls recently, and luckily we've also built into 2 wallets. So the timing was at least fortunate. We have a wallet library based on the Rust DLC kind of open source library that people use in the DLC community. And so we built that into Xverse wallet and Hero wallet. So they collectively have about a 200,000 person audience. So about 200,000 people can already do access DLCs. So now that when we build it into protocols, and we support protocols building it in themselves too, of course, when it's live in protocols, you should be able to do this stuff nowish. So the timing is good. Where we are as a company is we're doing a security audit on the infrastructure. So we have a DevNet, we have some demos and stuff you were just showing here. So we've got some stuff in DevNet. We've got a private beta. DM us if you're interested in joining and digging in. Really happy to support everyone we need. And we're looking to launch in production within a couple of months, and ideally sooner than later. But we're going through the security audits now, because the last thing we want to do is for us to miss something important, and then people get rugged, and it gives the whole space a bad rep. So we're just going to go through the security audits, and this stuff should be available very soon.
What are your thoughts about this emerging ecosystem of DeFi on Bitcoin? How large of an industry can this be? And can this exist on layer 1 with DLCs? It seems like this is like the multi-billion-dollar product or protocol that a lot of individuals are chasing right now. Because right now, the Bitcoin DeFi ecosystem mostly persists either on a side chain or on an L2, right? Like stacks. But doing this on chain, right? Kind of like what BRC20s are, or right, what ordinals are. Is this possible with DLCs?
Yeah, it's definitely possible. Your question also is sort of like, in what way will the future unfold? And I've always found, I've been in tech a long time, and specifically entrepreneurship and building stuff. And I found that the actual market use cases tend to be a lot more kind of imaginative than me. So which is great, because that's how. So we'll have an idea like, oh yeah, I think DLCs could do X, Y, Z. And then, next thing you know, people are using it in very, very interesting, fascinating ways that we could never imagine. And so, we're sort of doing our part to just make it as available and as easily understandable and as usable and forkable, if that's a word, as possible. But so whether it'll be people building DeFi on Bitcoin or DeFi on other chains utilizing Bitcoin, or ordinals, moving over, or whatever, I have no idea. In fact, there's even some interesting, we even see interesting integration opportunities where custodians can play a role. So, I think BitGo and Galaxy and Gemini, they could play a role in the shaping of this and offering DLC related non-custodial services as custodians. There's just a lot of ways. Chainlink, obviously, we like them. You can use any Oracle, of course. We like the Chainlink team. Just they have a lot of other products like functions and keepers and stuff that are also helpful. Although not strictly speaking required, but they're very helpful. So we see them, coming up with interesting things. They have a bridge product they're building called CCIP. Maybe you could move native Bitcoin with CCIP. We're talking to Axelar. There's so many ways this can go that I think it's almost like every day I learn a new use case or a new pain point that can be solved. But one thing is clear that everybody wants safety in their Bitcoin or ordinal deposits. So, it's been a really cool learning. And I think, as we I try to kind of maintain like a running list of use cases we've seen. So anyway, I haven't exactly answered your question on what way will the future unfold, but I see great things for, people doing meaningful stuff and having good user experiences, which is important for adoption and engagement, with Bitcoin, which we couldn't have said, in such a carefree way, maybe a year or two ago.
You do bring up a good point, which I don't think we've discussed yet. We've mostly talked about how to build with DLCs, but I guess the next portion is how can you improve an existing product with DLCs? We've talked with Emblem and DLC.Link on where is that collaborative effort, right? How does it improve degrees of decentralization, which is what everybody wants? When either of you could take this question, is when a team approaches you that has a product already that maybe has product market fit, how do you go about evaluating that to see if there's a connection for DLCs to improve an existing product already?
Yeah, well, when we run hackathons, we've sort of seen that like when you're just starting out and you're trying to get like a proof of concept together, I mean, you can just do it custodially, like unless the app specifically needs DLCs, and some do. For lending, there's probably an argument there that you need it right off the bat, but you could just build the MVP custodial, just have a proof of concept, get some customers, get some customer validation, kind of get past that first like hurdle, maybe get some funding or, self-fund or whatever, however you're funding the budget. But then when you want to decentralize, then that's where we come in. So there's definitely like a maturity model. We do try to support for companies that don't have the budget or resources, or maybe it's not yet a priority to decentralize through DLCs. We just try to have as much free content and as much, we have a Discord community, people can ask questions, one of us will answer, or someone on our dev team. So we just try to support it as much as possible. But then when it comes time to like, okay, we actually need to get this, decentralization kind of infrastructure built in, that then it, we scope it out and then we go deeper. But, half of the game is just kind of just telling people that now this is possible and they can just come up with their own use cases and their own, people have just different they see different pain points that can be solved. And so then they can come to us with kind of easy, loose, even just kind of loosely, even on our website, we've got a chat bot. You can pretty much just ask me a question directly. Probably I'll respond. Usually I'm manning that thing. And, so anyway, long way of answering that, depending on where the company is, we try to be helpful at various stages.
Yeah, I've learned that working at Emblem, that most of the time you just spend answering questions because people are just actually unsure, right? You answer 99 questions or 100 questions, and maybe 2 or 3 people actually end up becoming, customers or longtime users.
Yeah, but that's great. It's education. My last company, AI for content. Content is education. I love the idea of educating people, ideally with content, or but we could do question and answers. The only question that, I get a lot, and the answer is no, is when token. Hey, do you guys have a token? Can I buy the token? Can I speculate on a token? We don't have a token. In the future, if we have a token for some use case we can't really understand right now, then, we will have a token then, I guess. But very likely, we don't need a token. This is a Bitcoin thing. It uses Bitcoin validators. We're not going to have our own bridge. There's no token. There's unfortunately, no chance to kind of speculate on the rise and fall of DLC.Link as a company. And if that were to change, we will announce it. But keeps our life simple. I live in New York. We have no regulatory, footprint needed. We make software that lets people lock up their own Bitcoin or their own ordinals. We never hold anything. We're not a money transmitter. We're a software company, so it keeps life simple, and I don't have to move to the Bahamas or whatever.
Yeah, no kidding. So it's interesting. I was thinking about this as we're having this conversation. your DLC started on mostly smart contract platforms or use cases. It sounds like the largest request on maybe something like Ethereum is asking or seeing if DLC can help decentralize the product even further. Whereas when you move to Bitcoin, it's already sufficiently decentralized. And so now they need some more kind of like simple smart contract functionality. Is there anything else between both of those chains that you see as maybe a common request for DLCs to be used?
When it comes to cross-chain, it's really just like, wow, I didn't even know that's possible. Because people have just gotten used to bridging and wrapping. And when we explain the attestations and whatever, they're like, oh yeah, that's a bridge. And we're like, no, because bridges have validators and they hold state and they hold your money and you lock Bitcoin and they put it in some sort of smart contract or a pool. And therefore, if the validator is hacked, you can lose your money and there can be theft. With the DLC, that it is not a decentralized consensus network. Everyone, because we're looking at all these Oracle networks and whatever, and we're like, oh yeah, it's like a network and yada. No, it is not. It is like really simple. The attesters are not a party to the transaction. The attesters don't know who the parties are in the transaction. They don't know who Alice and Bob are. They don't know what transaction they're attesting to or what DLC they're attesting to. They don't know how much Bitcoin is locked. They have completely no knowledge. They're just like a translation feature where it's like the ETH contract says, repayment or liquidation. Let's say, ETH contract speaks in Spanish, a tester translates it to Chinese, DLC executes in Chinese. It's like literally just translating, from one language to another. And that's all it does. So just kind of explaining that is a really new concept for almost everyone we talk to. And so anyway, that's a lot of what we do.
And yeah, maybe I would also say, so getting, one question in my mind that I like to ask a potential integration partner to see if it would make sense for them to use DLCs in some form is like, do you need to accept Bitcoin as collateral? Do you want to use native Bitcoin? Like a better way to accept Bitcoin in some form into your platform and then let's let users lock Bitcoin on the BTC network, kind of have some sort of proof that reserve is safe, and then issue you some stable coin you can do whatever you want with. So that's the going to ETH example, as you mentioned on Bitcoin, like just doing more complex things with it directly. But there also could be a Web 2 component here. I mean, you could imagine accepting Bitcoin as payment on like a standard Web 2 website via DLCs, where again, the user does not actually give up control of that Bitcoin until some other event has occurred. And probably we would power that through a smart contract somewhere in the back end. So rather than us running a Web 2 service that's going to dictate whether or not that DLC should close to send the money or close to give you the money back, we would probably have some connection. So like a Web 2 app might call into a smart contract and say, hey, we're setting up an account for this user. We want them to deposit, to lock, 10,000 sats for access to something. The user then locks it. That's communicated back to the original app, and then whatever can happen. And then if it does, the communication can then say, like, maybe both parties have to agree, yes, it's done, and then the sats can move or not. So you could use DLCs as well as a Web 2 connection, almost the same way you would do it from a secondary blockchain.
You know what that reminded me of was the Lightning Network, which is the creator is the one who wrote the DLC white paper, right? It's very similar, right? It doesn't have channels and stuff like that, but and even think about the Web 2 component where you can do an if this, then that kind of payment network, right? Or sports betting, a lot of different things. I think most people in crypto, we tend to forget that there is even a Web 2 world out there. We're so focused on decentralization and tokenization, right? And decentralization and all these different permissionless, all these different components to the network, that you forget that there's still a multi-trillion-dollar market out there to disrupt. But as we
absolutely,
Yeah, but as we close this down though, what is the future of DLC.Link? Like, what is your guys' objectives in the short term? And do you think that there's going to be other DLC like competitors out there?
My goal is I want a DLC for every man, woman, and child. When babies with DLCs, it's kind of my running joke that everything we do is so abstract and esoteric that a small number of people care passionately, and everyone else is like, "What? What's Bitcoin? But anyway, no, we want to just like I think of us as an analog to. I used to be in big data, so I think of it like a analog to like Cloudera or Red Hat or whatever, where we actively support the development. We have open source stuff that we contribute to. We have closed source stuff that we, have a premium offerings that we charge for. We have, we service small businesses, SMBs, startups, as well as enterprise, OEM integration, VAR channel, value-added reseller channels, affiliates, custom, ISV, independent software vendors. So I don't know, I just threw out a lot of like business lingo, but basically anyone who could benefit from DLC, we support that through various channels, and we provide, high quality maintenance and support and customer experiences on that. And then, we just kind of get it more and more used and create more and more of if we just do lending alone, and we create a viable credit market on self-custody Bitcoin, where Bitcoiners have, hopefully hundreds of options on how to earn yield on their self-custody, and they can access that from their wallets, directly, and just kind of do it all in the wallet. That would be amazing. Like that would be much safer and much, just much safer from human error and other kinds of error than what we have today. And that would be amazing. And then, Bitcoin would grow, and, small businesses. And I went to El Salvador last fall, so I use them as an example, but small businesses anywhere like El Salvador, Hungary, whatever, people can, use Bitcoin, invest in Bitcoin, or, hold Bitcoin, and then also take loans and stuff and build, use it, whether it's for emergency or for, investment return. That'll be amazing. I do think there will be definitely, I hope there will be competitors in the future, just because, if an idea if nobody else wants to do it, there's something wrong with the idea. So I think we're going to see other companies like Cloudera. You had Hortonworks and MapR. This is like old stuff. I'm a dinosaur. But, you had other companies with different approaches, which would be great to see. And it would grow the whole DLC pie. We're all battling status quo. Basically that, there are no DLCs being used. Like that's the whole pie. The whole pie right now is like almost $1 trillion of Bitcoin value. I think it's going to grow. I'm long Bitcoin. So it'll be, this will be a really big, a primitive that a lot of companies and a lot of groups, and even not just for-profit, but non-profit, you can have foundations and stuff, running a tester. I mean, there's just going to be a lot of change. And we're just really happy and proud to be playing the role we play and trying to be as helpful as possible as we see all of this evolve over the coming years.
Yeah, I think that's why all of us are excited in the ordinal space. It's now you have, what is it, $600 billion, $500 billion collateral just sitting there waiting to be used, but it has to be used in the right decentralized way for a lot of that to be unlocked. I appreciate you guys for coming on and really explaining this. DLCs, it seems like it's simple, but yet complex, right? Grandma and grandpa probably won't understand it, but they will use it if it is the right way. They do know how to do if this, then that transactions, right? That's what all of us do. It's just finding those right, the right applications for that to be built.
Yeah, it's going to be simple. I mean, we really are trying to make the smart movement, the smart use of Bitcoin, dead simple. And so I would also love to give a shout out to not only the user business applications that might want to use native Bitcoin, the best way to use Bitcoin for a payment for any smart transaction, but like in our mission to make this as dead simple as possible, we've created a wallet library in JavaScript. There's also a Rust version. So any Bitcoin enabled wallet out there that any developer for a wallet, if you want to enable DLCs in your wallet, we've got a UI, we've got a NPM package. the integration is dead simple. So any Bitcoin wallet out there can just be supporting DLCs like that. And I would encourage any of those folks to reach out to us on Discord or however.
And it seems like DLCs and PSBTs are the two hot things in the ordinal space right now. Probably can use them a little bit interchangeably. I think that's what Liquidium is doing, but having that built into your software makes it much easier for these new emerging ordinal protocols and standards that keep popping up, right? That's see these now with recursive inscriptions and generative BRC721s and all these different things. If you're a wallet provider and you have that integrated, probably encourages a lot of other innovators to use your wallet and to build. So Aki and Jesse, thank you guys for your time. I appreciate it. And I look forward to chatting again, which I know we will. So appreciate it.
Thanks so much. It's been great.
Thank you guys for listening, watching. We'll catch you next time.